asking, please show me how to do this one shot, one kill. And I'm time traveling and telling you right now, Michael, this is how it's done. I'll be back next Saturday to talk to you. Until then, keep studying. Okay folks, welcome back. This is part 3 of a continuing series of 4 videos. If I could go back and tell myself what I know now. Again, this is a hypothetical conversation with my younger self. Purely fiction, just to give you a perspective on if I could tell myself what to focus on when I first started, it would hopefully have avoided the majority of the painful lessons and losses that I had to incur. How would I practice? Where do you backtest daily setups? Now, before I get into this whole series is really linked to the optimal trade entry pattern that I've made public on my YouTube channel. I've also included 20 videos of daily setups, so that way it kind of gives you familiarity to what this pattern looks like across a wide array of different asset classes. But I'm covering a simplistic approach to how you should be practicing. First and foremost, everyone knows broker demo platforms. Okay, so whenever you open up an account with a broker, generally they offer you a trial version of their platform, so you can test your strategies or whatever it is that you're utilizing for your framework for your setups. You can test drive it on a demo account. Forex has the ability to offer demo accounts that for some brokers don't expire, and it's not a big deal if it does expire. You just start another one, but you don't want to treat the demo account like monopoly money. You want to sit down with it and say, okay, how much of this hypothetical pretend money would I be utilizing if I was trading? It wouldn't have been $50,000 to start with. And working with a demo with a sober mind about what you're doing and building good habits and removing the opportunity to fall into bad habits. That means overtrading, looking for setups even after you've made a correct decision and the market shows you that you would have been profitable. It's not an invitation to go right back in the same day to try to get something else because it felt good. You're going to fall victim to that early on. So to avoid all that, don't have it in your mindset that you have to take a lot of trades every single day. You're going to lose a lot of money. You don't know it yet, but you're going to lose a lot of money trying to do that. And third-party apps like Forex Tester. You can go to forextester.com and they have a medium where you can go back and back test strategies and such. And finally, tradingview.com today, which doesn't exist at the time of you coming up now, Michael. The tradingview.com website offers pretty much everything that was available when you started. Metastock, Supercharts, TradeStation, all those things and bells and whistles that you're liking right now aren't really that important. You're going to focus primarily on the open, the high, the low, and the close. It doesn't feel like that's where you're going to be heading, but eventually you're going to strip all the indicators off your chart, Michael, and you're not even going to consider any of it. It doesn't make sense to you right now, but trust me, everything becomes clearer by not having anything on your charts. You don't have to have any overlays of your platform indicators. You like stochastic right now. It's not going to ever appear on your chart anymore. You like MACD. It's never going to appear on your chart anymore, Michael. You want to strip the chart down and focus on the 4 price levels that is the most paramount. It's the open, the high, the low, and the close, and looking at different intervals. The previous day's highs and lows, previous week's highs and lows, and previous month's highs and lows will offer a plethora of setups. It doesn't feel like that makes sense to you right now, but it will absolutely unlock all of the understanding that you'll need to carve out consistent, steady setups. So let's go into TradingView and look at how we can practice. Alright, so here is the TradingView platform, and I have the chart set up with the euro-dollar currency pair. On the left hand side, it is a 15-minute time frame, and on the right hand side, it's a daily chart. And the assumption is that we're focusing on the optimal trade entry on a higher time frame until it delivers to a key level. And I'm going to show you right now what that would look like. Here we have a high that would be targeted. In here, as the price was rallying up, we can see before we got to this high, backtesting these types of setups is what you would be doing. We're going to show a Fibonacci on this swing low with this candle's higher low and this candle's higher low surrounding this one particular candle. That's why I'm anchoring it to that. And I'm dragging it all the way up to this candle's high, because as it's making higher highs, I'm going to overlay the fib on every successive higher high, because that's going to be the range in which any retracement comes. It'll be within that range, and it'll be apparent when you see it here. So we draw this up to that. Okay, so you can see the Fibonacci that's anchored from this low up to this high. It captures this retracement. Now this candle right here is the 10th of July 2020. Here's the 10th on the 15-minute time frame. You can see how the 15-minute time frame drops down into the optimal trade entry, which is the 62, the 79% retracement level, and 70.5 sweet spot. This level is going to be one of the levels you're going to like a lot, but you'll save yourself a lot of frustration if you just use the 62% retracement level, Michael. Most of the trades that you're hunting in these next couple of years are going to be unwilling to trade at a 70.5 or even 79% retracement level. But if you would just simply use the 62% retracement level and defer the insatiable desire for you to find the perfect entry all the time, later on in your 40s, you're going to feel real comfortable with not having the absolute best entry and the absolute best exit. There's lots and lots of opportunity in between. So 62% retracement level in here is ideal, and we can actually see a key reaction off of that 62% retracement level. Price starts to move higher. Now, your focus is to imagine every daily candle moving higher. Open near the low of the day, close near the high of the day. Up close is the mode of delivery we're expecting until we get to this high. So when we get up to it and through it, okay, remember that slogan: to it and through it. To it and through it. That's how you're going to find the easiest bread and butter setups there is in every market asset class. The idea is the framework is this optimal trade entry is going to keep delivering until we get to this high and slightly above it. Here is 1/2 a standard deviation, and it's calling for 114.46 and 2 pipettes. Okay, the actual high of this price went as of the time of this discussion. The high comes in at 114.52 and 1 pipette, so it goes to